This is your LMAX exchange technical update for Friday, November 11th, 2016. Eurodollar. So the euro has gravitated back down to some key multi-month support at 108.52. A break below that level and a close below that level will open the door for the next major downside extension towards next key medium-term support in the 105 area. At this point, look for any rallies to continue to be well capped up towards and ahead of 111 now, while ultimately only a break all the way back above 1367 would negate the current downside momentum. Sterling dollar. So cable has seen a nice little bounce in recent trade out from those 31-year lows, and at this point there is risk for additional upside towards the previous base, which was in place around 128. However, the downtrend does remain intact, and so long as we hold below 128 on a close basis, there is risk for a lower top and fresh downside extension back towards those recent 31-year lows down around 120. Dollar yen. So dollar yen has been in the process of potentially carving out a base. We saw a very intense bullish outside day formation on Wednesday, and this is seen follow through on Thursday, and the market could be poised for a break above next key resistance at 107.49. A break above that level will open the door for the next major upside extension towards 111.45, which is a high going back to May of 2016. Euro Swiss. So Euro Swiss has been under pressure, breaking out of a range that was defining trade for several weeks, that 108 to 110 range. The breakdown below 108 does open the door for the possibility of a retest of the 2016 low, which comes in at 106.24. At this point, we need to see a break back above recent resistance, which comes in right around the 108.65 area to take the immediate pressure off the downside. Aussie dollar. So Aussie rallies continue to be very well capped above 77. The market was unable to threaten that 2016 high that's just over 78, and the latest topside failures suggest that we could see additional downside pressure over the coming sessions. But overall, dips have been supported in this market, and we would need to see a break below 74.21, that low going back to the 27th of July, to officially put the pressure on the downside. Dollar CAD. So dollar CAD has been consolidating recent gains. Overall, the structure here remains highly constructive, and there is risk for a fresh push towards the 135 to 140 area over the coming weeks. Any setbacks in this pair should be very well supported ahead of 130. Kiwi dollar. So Kiwi continues to show signs of topping out in 2016. The most recent rally was well capped up above 74, and we could see some fresh downside over the coming sessions. Ultimately, a breakback below 70.35, those recent lows, would be required to accelerate declines. SPX 500. So the S&P 500 looked like it was breaking down earlier this week, and on Wednesday the market saw a sharp pullback that took it just shy of that 1990 June low, but the market has put in a violent reversal higher now, and this does suggest that we could potentially see a break to the record high from August, just shy of 2200. At this point, if the market does stall out and is unable to take out that record high, it could be still a process of a topping. We could still be seeing the process of a major top, but again, at this point, at a minimum, we need to see a break back below 2100 to suggest that this topping is taking place. Gold. So gold has seen some setbacks in recent trade, but overall the market has been supported on dips and is expected to once again be supported on dips down towards the 1240 area in favor of the next upside extension back towards the 2016 high, which comes in at 1375.